Hello, you're watching weekly review of the US stock market on the InstaForex TV channel with me, Kate Stichina. On Friday, the US stock index suffered the biggest single-session declines in more than a year. A stronger than expected US monthly jobs report weighed on stocks. The Nasdaq Composite Index slid by 2% to settle at 7,240.95. Its weekly lows were the largest in about 2 years. The Dow Jones Industrial Average tumbled by 665.75 to end at 25,520. Despite last week's losses, the Dow Jones is still up more than 3% year-to-date. Last Friday marked the first time since June 2016 that the Dow fell at least 500 points. In the biggest one-day drop since September 2016, the S&P 500 index closed down by 2.1% at 2,762.13. The last week's decline erased $945 billion from the index market value, with $511 billion lost on Friday alone. The January jobs report showed the strong United States economy might finally be translated into rising wages for American workers. This is a sign that higher inflation could be around the corner. But what is really worrying investors is that the fuel behind this stock market boom, namely cheap money from global central banks, may disappear sooner than they thought. In corporate news, tech giant Apple reported better than expected quarterly results, but its shares fell by 4.4% after the company said it expects profit margins of 38% to 38.5%, tighter than the analytical forecast of 38.9%. April also reported lighter than expected iPhone sales for its previous quarter. At the same time, Amazon shares spiked to an all-time high at $1,498 on the back of its earnings report. The e-commerce giant said its Amazon Web Services sales, a key component for the corporation, hit $5.11 billion. Economists had anticipated ABC revenue to be at $4.97 billion. You are watching weekly review of the US stock market on the InstaForex TV channel with me, Kate Stichina. We wish you profitable deals with InstaForex.